So the markets have been pretty choppy this week. Pretty bad week for stocks in general, but today seems to have a little bit of a rally. Yesterday it was way in the red. So today we're up 2%, about $240 in my TFSA. So a little under 16,000 right now. And for the month, we're down negative 2% over the past 30 days. For the past week, we're down 4%. So it's been a very brutal week. All time, we're only down 1%, so pretty neutral in the portfolio, but I'm seeing this as a great opportunity to pick up more shares of stocks at a lower price. So I'm taking this as a positive since I'm still continuing to build this portfolio out. I'm not living off my dividend income just yet. So if you want to follow along with my buys and sells from week to week and just any general news updates with my portfolio, and any lessons I can learn along the way and share with you all, just like the video, subscribe to the channel, and let's roll the intro. Starting with the portfolio update. So with ATD, I bought one more share. So we went from 8 to 9. They had excellent earnings. So overall growth in the business overall. So revenues were up. And they also increased their earnings per share by 19% compared to the same quarter last year. So incredible growth. And they also have a plan to buy out 10% of the shares outstanding in the company. So when a company buys back its own shares, you will have more ownership of the company, and the company can use its future free cash flows to purchase back more shares, giving you even more ownership of the company, or they can raise your dividends since they're not paying out the dividend on any share they buy back. And for Aritzia, it's actually seen a little bit of a rally today, and that's mainly due to Lululemon. Lululemon stock went up 12% today, so they had outstanding results. I'm going to highlight one key thing. So it surged as much as 12% on Friday as customers continue to buy pricey athletic wear despite a challenging inflationary environment. So they're saying that revenue in the quarter jumped 29% and sales increased 28%. So the fear that, we're in an economic slowdown and all the inflation is going to be hurting a clothing store, not the case with Lululemon. They're very expensive clothes, and they're in the same industry as Aritzia. So since Aritzia is also selling like a higher end clothing, luxury, people are assuming that Aritzia is going to do just fine, which is a fair assumption to make. They're a much smaller company than Lululemon, but this is a great sign. So if you own a type of company, it's definitely a good idea to keep track of other companies in the industry and how they're doing, just so you can be prepared for price declines or any major news that affects your theory on the stock. So in this case, I think Aritzia is going to do just fine. It's going to grow very quickly and do well in the short term, and it looks like Lululemon is proving that so far. So very good results. I can't wait until Aritzia shows its next results. Moving on, I've been buying a little bit more Scotiabank just because they've been dipping. So Bank of Montreal actually announced their earnings. They had pretty disappointing earnings as well. So it looks like Scotiabank and TD Bank, which are the two banks I have, had the strongest earnings out of all the banks, but the entire sector is going down. Anyway, so we're up a little over 20 shares of Scotiabank. So just been buying this one fractionally whenever I can. And then ENS, which is basically just another way to invest in Enbridge and get a much higher stream of income. This fell quite a bit in the last week, so I decided to buy 4 more shares. So we went from 60 to 64 shares. So this pays us a nice dividend. Enbridge is a nice, reliable, boring, very predictable business that just generates a lot of cash flow. You know exactly where this will be in 5 years. You know exactly where this will be in 10 years. So very steady, good income play. And we also picked up another share of Intel. So we went from 21 to 22 shares. And NVIDIA actually dropped a lot on recent news that they cannot supply China with any chips at all. So pretty substantial news for Nvidia. It could cost them about $400 million per quarter, so it's actually a lot more. So $400 just in this quarter, which is like 3 months. So about 1.6 billion annually to Nvidia, so, and that's not good. And they also lowered their guidance, so that hit the entire semiconductor industry just because Nvidia dropped, AMD dropped, and Intel dropped. All the semiconductors dropped. So we just decided to buy another one because it wasn't Intel didn't go down because of any news about Intel. It's just sector wide. I've also been buying a little bit of Microsoft fractionally, so we're up to 1.7 shares, just buying this a little bit at a time. And about one more share of Smart Centers, going up from 28 to 29 because this position finally went into the red, so it's a great time to add a little bit more here. And one more share of TELUS, which I've been wanting to add for a while, just because they're going ex-dividend on September the 8th. So if you're not aware, the ex-dividend date, if you own a stock before that date, so say you buy, the day before or a couple days before, you will get the upcoming dividend that they're going to be paying. If you buy it after that date, you're not going to get the current payout, but you will get the next dividend afterwards. So you still have time to pick up your shares of TELUS and get the next upcoming dividend. And for the dividends earned, we've earned $733.06 since starting the portfolio. Annually, we're earning $836.29. And monthly, compared to the previous update, we went up a little over $1, so $69.69 every single month, and being reinvested right back into the portfolio into more dividend stocks, or maybe a growth stock if I think that's a better opportunity. Weekly, we're making a couple of extra pennies, so $15.84 last time, $16.08 now. On the daily, we went from 226 to 229, so an extra 3 cents every day for just doing nothing and just living our lives, just making this money in the background while we sleep. And the months to earn $100 has shrunk, so instead of taking 1.46 months, it's taking 1.43. So I'd like to get this down to 1, so where we'd be making $100 a month, which would be a major milestone. And hourly wage is back up to 40 cents per hour, so we're trying to this hasn't grown yet, but it'd be nice to get this up to $1 as well and just go from there. And our goal is to reach $3 a day in dividend income, and so far we're about 29% of the way. So I'll just have to continue dollar cost averaging every single week, keeping up with my holdings, and not being scared by all the volatility in the market. I mean, I'm not. I welcome it because it's a great opportunity to add more to stocks, because when a couple of my stocks went down, I'm like, this is great. I have a great opportunity to add more. Like to my Enbridge position, I really wanted to add to that because it went down, and it's been so expensive for a while. So whenever that dips, I'm going to start loading up on shares because I want to get all my stocks up to the point where they can just buy themselves automatically, and I don't really need to invest any more money to continue growing and increasing those dividends, that they're just going to do their job on their own. And then with all my deposits that I do every week or every 2 weeks, they're going to go to whichever position I want to grow to maintain a certain allocation in the portfolio, or I could look for the best value, whatever I really want to do. I want to open up the portfolio, make it a bit easier to manage, just because there are a lot of positions that I have to keep track of. So if you haven't joined WealthSimple yet, just feel free to use my link in the description below. And if you sign up and you fund an account, you can get up to $3,000 worth of stocks. I'll also get a small, I'll get some kind of value out of it too. So it does help support the channel. And have a good day, everybody. And let me know in the comments below, like how your portfolios are doing, or what stocks you're buying. All right, have a good one.